Welcome to the 5-Minute Trading Edge, brought to you by the Institutional Edge System. If you're a golf fan, it's almost impossible to miss the Ryder Cup. It takes place every 2 years. And as many of us know, finally, the U.S. got it done at Hazeltine. There's DL3 on the right, Davis Love III hoisting the trophy. And boy, it was a spectacle to watch. And it did or went a long way in curing or helping with the meltdown at Medina. There it is on the left. That was 2012. U.S. went up on a really big run, and then the Europeans came back and snatched it. There's Jim Furyk trying to keep his composure, face in his hands. Phil Mickelson right next to him doing his best to put a brave face on and smile. But not good. That was a tough one to watch. Well, both 2012 and 2016 included big run-ups in score. And knowing when momentum is really on your side or when a reversal might come in, it's important when watching the Ryder Cup. It's also very important when watching any given market. So today we're going to talk about price runs. Specifically, being able to spot, and if you're a reversal trader, steer clear of continuation conditions. But when those conditions start to wane, to know when a reversal in momentum might be coming around so that you can ultimately get in and make a reliable reversal entry. This is something that a lot of retail traders struggle with. Let's take a look at our ES chart. Here, price is on the run. And notice a couple things about it. First of all, as it goes down here, it's exiting the value zone. So we're below value area low, so potentially in reversal land. Now, as it's trundled along here, there is two things to note here. The first one is the 5-to-1 imbalance summary. So look at this. The sellers go on a 5-to-1 run over the buyers. That's these bold numbers here, 96, 496, 35, 972, 895. And we're comparing that 96 to 12, 496 to 5, 335 to 12, 972 to 234, and 895 to 142. In these instances, the sellers have overwhelmed the buyers by a margin of at least 300%. And there's only one instance down here at the bottom where the buyers have stepped in. So that's a really big margin, and that's an indication that we could have a run on our hands. Now notice, if you're watching order flow sequence tracking, we have sequential decline, we have the COT at the bottom here, and we have responsive activity. That would be classic signs for potential reversal. Now, what do we do here? Well, let's give it a bar to make sure that this materializes. We have a 1-to-1 tie on the imbalances. The buyers won this, but a margin of 786. So they're putting up a fight, but they're not putting up much of a fight. Certainly something we might want to watch, but let's give it another bar. Look at this. We go on another 5-to-1 run. We are in continuation land, folks. So 5-to-1 run, a margin of 1777 as price continues to make its run down. Again, there's one responsive imbalance down here. But we monitor these prices as we go down from one to the next to the next. 7-to-1 run, a margin of 5046. This is something that we have to keep an eye on. These are continuation conditions. And if you're looking at getting in a reversal, well, this might be tempting. This might be tempting right here. We steer clear of it until we get real confirmation. Finally, it comes to us. As price has gone on its run, here's another example. Price has gone on its run 10-0, a margin of 93.04, 2-to-1, 54, 29. Check this out. We've got a reversal. Finally, it's in our direction, 1-to-3, and a decent responding delta. That's something that we're really interested in. Also notice the COTs down here at the bottom. We look for one other additional candle or bar for confirmation, and it gives it to us. Now notice in this case we're venturing back up into the value zone. But this is what we're looking for as far as reversal conditions. a imbalance summary that is changing in our favor, and a delta that is also decisively changing in our favor. So when you're dealing with a price run, perhaps it's in conjunction with news or some other market event, keep an eye on those imbalances and the imbalance summaries. Steer clear of stacks, that is multiple imbalances that you'd be dealing with. That is a stack right there. No bueno. You don't want to trade with that unless you're looking for the continuation, but that is not a reversal condition. Steer clear of those stacks. And then trade reversals with responsive activity. And if you have the benefit of a volume rejection level, that is something that you're definitely going to want to see. If you're looking for more information on how you can profit on continuation trades, watch our free 4-part training at institutionaledgesystem.com. Until then, thanks for your time.